then it's going to be our high-priced mortgage loans. Now, these are not bad either. So high costs aren't bad. They come with red tape. And again, most people try to steer clear. These higher priced mortgage loans kind of get a bad rap. Yes, they have a label, but they really just come with the baggage that you see here. And it's not nearly as restrictive as the high cost product that we just talked about. There's a balloon factor. We talked about that. We talked about non-QM loans. So I won't rehash that today because we've already done that. The second piece of baggage is going to be right in front of us here in just a few moments. It's that if it's a first lien HPML, it's going to require an escrow account. And then there's some subsequent appraisal rules that we'll also talk about a little bit later. So let's tackle the scope. Letter K, number 1, small letter A, page 329 at the very top. Our scope here is a little bit different than what we talked about with high cost. It's still consumer purpose, but it's closed end only. And then it's secured by, again, the borrower's primary dwelling. What we're looking for is the APR. So that's similar. We're going to take the annual percentage rate from the closing disclosure and compare that to the average prime offer for a comparable transaction based on the date the rate was set with the customer the final time. You can see our rate spreads here are different than the high cost. And one of the things that really drives compliance people and even the people on the front line nuts is, if you remember, when we talked about high cost, I said the rate spread threshold's 6.5 and it's 8.5, and you're good to 6.5 and good to 8.5. Well, when it comes to high price, at 1.5 and at 3.5, you've gone over the threshold. So you're good below that, but if you are at 1.5 or at 3.5, it qualifies it as that high price mortgage loan product. So for first liens, you get 1.5%. For subordinate liens, you get a little bit more. You get to go up to 3.5%. Again, if you are under that, you're good to go. At 3.5 and at 1.5, that makes it a high-priced mortgage loan product. Again, we have our rate spread calculator on page 330. It's going to give you a rate spread. It's not going to tell you it's high cost. It's not going to tell you it's high priced. You'll need to know, your team will need to know the thresholds on page 329. There are software products out there, maybe you're familiar with, maybe you're using, that will tell you those things, but the free calculator that we're sharing with you here today isn't going to just pop off and tell you that it's high cost or high priced. It'll give you a threshold, and then you'll have to know that whether you're at or below that depending on the particular status you're looking at. So the baggage, the second one that you see on the screen there, let's tackle that one.